I can, yes.
Can you hear me? 1 2 1 2 1 2.
I can, yes.
Okay, we're on. Let's go. Let's start this. Oh, we've got a few people on. Good afternoon, everybody. I hope you can hear us. Can you hear us okay? Okay. So, as the name suggests, this is an AMA, so go ahead and start asking questions. Sure. Yes. Do you want to share your screen or do you want me to share my screen or? Okay. So let's do this. Yeah, that's the right one. And this should work. Again, just a reminder that we're not that savvy in streaming on YouTube, so apologies in advance for any issues. Okay, you should see my screen now. And let's quickly talk about, let's start with the queues because I think those are the more interesting thing. Let's switch to daily. So, and I pointed that out, like the pattern that keeps repeating itself here is we see a very clear channel that started as back as September 2020. Right, and every time we hit the top of the channel, we correct sharply back into the bottom of the channel, and then depending on other conditions, we may bounce hard, or we may bounce low, or we may test again the top of the channel, which you can see here over and over again. We hit that channel once more here. This is where we started getting aggressive with hedges. What we're seeing right now, the moment that we broke that trend line, right here, we broke the trend line, we dropped all the way bottom, same here. So theoretically, there's two scenarios here that can happen depending on, the next week or so. So either we stall down to the bottom of the channel and then bounce again into the new year, or we continue to you know, chop around here and potentially go into new highs. That's the two scenarios I'm seeing. Based on this strength of this bounce, I'm inclined to think that we're actually going to break out of the channel and potentially climax from there. I did not expect this bounce to be that strong. So we're almost back to the highs that we had here before this, kind of a false breakout happened. But the fact that we've so quickly bounced here, there's a lot of strength here, and we even didn't go and test the gap. So my gut feeling, and again, I'm looking at the VIX here, and I posted that chart in chat. So that trend line, which was concerning, right, the moment we broke over it, it was very concerning, but we bounced back into it, which is a good sign. And then if you look at the bullies, right, the moment that we cross the the midline, that's usually when the market stabilizes. Like if I'm looking here, oops, sorry. Let's look at past instances this happened. So, there is the sell-off, then you have the bounce from the 20 EMA, that's the midline of the bullies, and the moment that you cross and close below it, then you just get the VIX to die, and you get a market rally. Same here, market bounces, chops around, continues. Once it loses the 20, things looks better, and again and again and again. So the fact that we're here and we're consolidating below that, that actually looks to me like a bear flag. So I'm cautious bull here. But having a hedge here and there on like Roku or other things is not a bad idea, because this could end up something like this, right? This is the same pattern that we had back in February 2020, right? You had the breakout, you had the retest, you had the consolidation below, and then you had the death. And I'm not saying it lightly, death. It was horrendous. So that's kind of my view. GP, do you want me to give you the screen and you can share what you're thinking? Easier said than done, but just 1 second. Just 1 second. Okay. Yeah, I think we're seeing your screen, right? Just give me a second to double check that you're not echoing. No, I think you're fine. Go ahead. So hold on, GP. I think I'm not sure if they can hear your audio. Can you hear GP? Okay. Okay, just 1 second. GP, can you speak now? Oh, they're still not coming out. So this should work now. Yeah, it's a mess, this software. We'll need to find a better solution for that. Should come up. Screen share. Can you speak now, GP?
Hey, can you guys hear me now? I feel like I'm in a Verizon commercial. How about now, guys?
Yeah, I think they can hear you.
Okay, great. So, awesome. So if you're looking at my QQQ chart, when I'm trading intraday or when I'm looking at stuff intraday, I don't normally do moving averages. I don't do fibs. I don't do anything. From that perspective, I like to keep it really clean. And a lot of that stuff I look after hours when I'm going through all my charts and stuff like that. So what you're looking at on the screen here is the QQQ chart, and you can see the weekly pattern has been the weekly pattern, which is it takes out all-time highs, comes back to retest it, and then takes off again. So we're in that scenario right now. Last week we tested the all-time high from August, it looks like, or end of August, beginning of September. And this week we so far followed through. The week's not over, so this candle's a little bit misleading. But what you're looking at here is an inside week off the prior all-time highs here, right? So if you're looking back in 2020, you see we came back here, we retested on 3 weeks straight down on volume here as well, right? We wicked off that all-time high, we put in an inside day, and then kind of resumed the uptrend. So what the part that concerns me is this long-term uptrend line of the Qs was broken back at the end of September, and then it tried to reclaim, tried like 3 or 4 times, and then just fell down, right? And then back into all-time highs. So the reason it's choppy is because ultimately we're still trying to figure it out. We still need more data, and so far we haven't been able to reclaim it. We tried last week again and failed, right back into the prior all-time highs. This week we held prior all-time highs by, I think, a few pennies, or last week's lows, if you want to call it. And then we put in an inside week, and we're pushing up on volume, which is interesting as well. As you can see here, this is some of the more heavier weekly volume on the Qs. So there's some positive signs. There's also some negative signs, and that's what we got to pay attention to here. What kicked this off ultimately was the Fed talking about accelerating their tapering program. So the thing that we have to realize is tapering and rates are two different stories, right? So they're accelerating tapering, which means they're reducing the liquidity in the system. So you just got to be careful that you just got to be careful here, because we don't know where it's going to go. We have some clues with Apple leading here that the bias is to the upside, is my opinion, because Apple is a general market health. They're weighted heavily in so many different indices. So where Apple goes is where kind of the market goes. And if you've seen on past corrections, Apple's the one who's leading us lower way before the market actually comes down. So here we have Apple leading before the market bottom. So it's just something to keep an eye on. There's a few conflicting thought processes here. So I'm just, as you can see, I'm not doing a lot of trading. If I am, it's a 1 to maybe 3 contracts at the most until we get some clarity, because this chop can can destroy you. And on top of that, you're sitting in a end of year cycle where people are repositioning for 2022. So you're going to see moves both ways. So that I think that's what you guys have to keep in mind is that the trades are a lot smaller than they've been since. Did we when did we start talking about getting puts? I think it was right around like right before the Thanksgiving beatdown. Um, right into like OpEx, we were getting some puts. Like, I only got like a week and a half out, so I'm not holding any. But I think you had gotten some December puts.
Yeah, I can check.
I think it was right around the OpEx time frame, right?
Yeah, the 19th of November.
Yeah, exactly. So, I think that's just I'm not trading a lot. I'm in the mindset usually is fewer is better in general. And then when you have this up and down kind of like if you looked at all of the charts I posted last night, I was talking about mean reversion bounces and they completely smoked it the other way today. So um, we're still trying to get direction. We're still trying to get a carve out to the bottom. So don't be a hero. Look for stocks that you like and you want to be long term, and then see if it's a threshold that you can handle. This is for more investing side, but the trading side, I'm just doing less. Less is more for me right now. So I just wanted to make sure that you guys understand that because this whipsaw, these 50, 60 point future 5 minute candles is not normal. Um, and that's inherently part of the volatility being higher, but also leads to a lot of whipsaw movements. And 1 second you're up 300%, and then literally the 5 minute candle later you're down 50%. So I've just been through too many of those to sit here and push. So if I'm okay with and I think the other part of the conversation that people ask is how do you risk manage? That's kind of how I risk manage. I'm not putting big trades on. I'm trying one or two or maybe three contracts at the most. And if it doesn't work, it's the defined premium that I'm going to lose, not some exponential amount. So just keep that in mind when you're doing some trades. Sorry for the little deflection of conversation, but yeah.
So,
One other thing. I think that's the big thing here is we don't have a direction. We're still looking for the candle to give us the direction, but we have some clues, right?
100% agree. Yeah, it's we could, like, if you look at monthly chart or weekly chart, we're still trending up, but it's, this could be a reversal or this could be just a reversion to mean. So you have no idea at this point which is which. But the trend is your friend. So, the assumption is we're going to resume the trend until it's proven wrong.
Yep.
So just to from my perspective, I agree 100% with GP. So trade much smaller. I had a question before people asked me, so when do I stop or how do I use stops? And mostly is what GP said is that I don't have stops, but I will stop out if I think either if the trade is invalidated and there is still some value to salvage from the position, I will stop out, or if I believe that the trade is still valid, but we are going to see pull, and given the fact that we're playing with weeklies, the premium crush could be detrimental. So, I can try to find an example. Let me take the screen real quick.
Well, I think I saw you only take like 80% or 90% on a win. So
yeah.
that to me is your risk management as well, right?
Yeah,
You're
it's like take profits quickly,
yeah.
take your risk off the table as quickly as you can, trade much smaller, because again, your win rate is going to be significantly lower at this point. Um, even if everything goes like Lulu had good results and it's crap after hours
Yeah.
action, so
But look at Broadcom. That's now it. I have it on the screen right now. for you guys who are talking about it, it's up. So, um,
What a piece of shit.
yeah. I think I think Freddie's asking the question, which kind of bodes to this, is what causes UpX volatility or crazy swings? Um, no one knows is the easiest, simplest answer. Um, there's a there's a plethora of stuff that's going on in the market that's behind the scenes that we're just not privy to. We don't have the information. As you can see, I've been talking about Amazon for a while. It's it's driven by the derivatives market. Like it's not going anywhere. Like you have you just have people who are bigger and larger who are going to control price ultimately. And I don't mean that in manipulation forms. Is the derivatives market does decide where things are going. We've talked about gamma squeezes up and gamma squeezes down. So it all really depends on where things are going, and that's short-term price action. When I talk about the gamma squeeze and gamma squeeze downs and up, but it's not long-term price action. So if you're looking at a stock that's been beaten down because of options related stuff, um, but the story is still much bigger than that, then price ultimately will work itself out. It's just the short-term swings that will get destroyed. So just something to keep in mind as well. Dibby, OpEx volatility or crazy swings?
Yeah, so it's besides the fact that let me try to see if I can bring out like an option chain so I can better discuss this. 1 second. No, this is not what I wanted to bring out. Okay.
If you guys have any, well, Dibby's doing that. If you have any additional questions, just throw them in the chat and we'll go through them as much as we can.
Okay, you should see my screen right now. Let's pick, give me a ticker that, let's do Apple. That's usually, it's got a decent, Starbucks is, I think, a good one. All right, so if we look at the OPEX, I'm looking, okay, so yeah, that's usually, you see those things. So there's heavy OI. Where is Starbucks trading right now? At 115. So there's heavy open interest around 115 with calls, and there's also not so heavy open interest on the put side. So Freddie, just to kind of give you a glimpse of what happens when you buy a contract, the option market maker does not have directional risk. Like everybody is saying, the option market maker screwed me and all of that. This is just bullshit because basically what the option market maker is a market maker. He has no directional risk. He makes money out of the spreads, and he is hedged with common stock. He has unlimited margin, so he can buy as many stock as he wants in order to create the option position. Now, when you're out of the money, your deltas, the meaning of how much your option position moves in comparison to the underlying, is low. But as you get more and more into the money, the delta is getting bigger and bigger. So the option market maker will need to add more common stock to hedge itself more. The other way, this is more intuitive on the upside, but on the downside, when an option market maker is what do you call it? Is buying back a call, then he disposes of those shares. So that what triggers. There's a lot of traffic generated by you buying or selling options because the option market maker is hedging himself against the position that he just sold you. So saying all of that, if you look at, again, let's look at the 115 calls, sometime between now and next week, those are going to get rolled out. So there's about 12,000 contracts with a delta 50, right? We're at 115, so the delta is 50, that are going to get sold because the option market or whomever holds those contracts is going to sell them and the option market maker buying them back can now sell the shares that he used to hedge them. So as that happens, that creates a lot of volatility, especially when you get into OPEX. That's the pinning process or the max pain process that everybody's talking about, because when you have, let's find something that has a symmetrical thing, maybe Apple. I'm looking for big. Yeah. So 170, you can see heavy contracts on the put side and heavy contracts on the call side. So this is, and we're within, spitting distance from 170 for next week. So what's going to happen is those guys, the holders of the 175 calls, are going to start selling their position. The stock would have selling pressure on it, but at the same time, the ones who are having the puts are going to have, they're going to sell their puts. So the option market maker, excuse me, can buy the shares that he shorted in order to hedge the position that he sold, is going to buy shares, and that's going to create buying pressure. So in between those positions, as they get wind down, there is a lot of buying and selling pressure around 170 and 175, and most probably it will close next week around that level, unless some unexpected event is going to create such a buying or such a selling pressure that's going to obscure the option market maker activities. I hope, kind of long answer, but I hope that helped understand what's going on.
Yep, totally makes sense. You have to have an outlier event, right? And usually it comes with volume to push out of those option chains. And that usually indicates a really strong stock as well, right? Or in a
Yeah.
strong move.
Strong demand.
Yeah.
That can just, to basically just swallow the whole option market maker volume.
Yeah, it says a lot about the strength of the move, right? So
Yeah.
I think that's always something to keep in mind is what you'll, and if you've seen, I've posted it the last couple of weeks, is the demand hasn't been there. So if you saw there was essentially a gamma squeeze down to the largest put strike, um, and every little bit of selling just kind of accelerated to the downside. And it was literally like 2020 March where puts were consistently going into the money with no call structures out there. So that's usually to me an idea of gamma squeeze or the market makers trying to hedge their positions down, right? So there's just too much selling pressure. I think the next question here is for me, which is, do I prefer yearly or monthly charts? Top-down approach, Karush, sorry if I'm pronouncing it wrong. It's always a top-down approach for me. Is yearly is I don't look at that very often because you kind of know where the year is. Monthly and weekly, daily, down to intraday. So when the yearly is red, but the monthly and weeklies are green, it's just something to keep in mind because it's a yearly pressure that resistance will probably be very prominent versus support, right? So like that's the thing. Like when you have all time frames aligned, starting from the yearly all the way down to the intraday, then support becomes exactly that. It's support. It's stronger support, right? But you'll see all these charts today, right? Like Peloton, Zoom, all that stuff hit short-term resistance and got smoked because the yearly is red, the monthly is red, the weeklies have been red, right? So even though you have a green week, as soon as it hits a bit of resistance or a bit of volume area gaps, whatever you want to call them, or whatever you're looking at in terms of metrics, it's going to find resistance first. And when that starts to change is when you start to recognize that there's a character shift. But until that changes, so like the moving averages, right? So I think Square rejected the 20-day yesterday, and it was straight down today. So it's been in a constant downward cycle. So you're looking for resistance to become resistance, and you're going to sell there if you are playing to the upside. And if you're trying to play to the downside, you're going to buy puts there, is what you're going to look for. And then when you have your puts go the other way on those resistance and it breaks through, that's when you have to recognize there's a shift in character. And what you also have to realize for me is that every stock has its own set of players. I think we've talked about this before, that the 20-day might be an area where Square gets resistance, but for Roku, it might be the 65-day moving average or whatever it is, right? So, or gap support or whatever you want to call it. I hope that answers your question.
Yeah, so
I
John,
haven't been watching Align. I don't know if you have been.
yeah, oh, I was watching. I actually have the chart on right now. So look, it's been a beast. The company's solid. It's just that, as a word of caution, just look at what it did from 2018 through 2020, right? It can consolidate for a long period of time, so you don't know right now if this is the consolidation period, right? It potentially could be just setting up here for a couple of years consolidation within that box. It's it's unclear. It's been extremely volatile, which makes premiums unplayable, right? Those are weekly bars. You can see how, basically when it was trending, there's like one strong week and then it just trends up. Here we're all over the place. We're chopping. It is a wedge, but it is a wedge which is below the trend line that was, basically started here, or the channel that was here. So it's hard for me to say if it peaked for the next few years, or it may continue higher. If there's an opportunity to buy it, then wait for support and not, or trade the breakouts. The fact that it's back on that channel or reclaimed that trend line is bullish, and this is potentially a double bottom. It's just that this volatility drives up premium, and it's very, very hard to play it. So that's kind of where I stand on the line right now. This is a weekly chart right now.
Freddie, I think you're making a statement. I don't know if that's a question there. Um, I think that's anticipation of where the stock can go, right? So when you buy out of the money, that's the type of trading we do here. We buy out of the money. We're not in the money buyers, but there's tons of people who are doing in the money buyers, in the money buys, and they may not get their 100 or 200%. They might get their 50% and take. So everyone's got their own way of trading. I don't see any other questions. Anyone else have any questions?
Yeah, thought on roadblocks for next week. So let's talk about. Let me pull the roadblocks chart. That's in the from Accidental Trader. Let's do this
Oh, he
roadblocks.
posted in the chat.
Yeah, daily. Because I also shared this chart on chat, but so let's actually start from shorter time frame. So this to me looks like right, everything that, and this is something that's an important assumption. Everything that moved 30% in a single day, right, from 77 to 104, the buyers here, they didn't, this is heavy institutional buying. They weren't expecting this to fade out and die. It will consolidate after that, but they're not here for a 5% gain and they're going to sell out. They're here for, 50 to 200% over the next couple of years. So this was heavy buying. Again, I don't see that with the volume here, but because it's an hourly chart, I don't know if the daily will show it. Yeah, that's better. So you can see the buyers here stepping in, and also supporting it. So it's not only that they believed it at 110, but they also scooped up the, whatever was available in lower prices before it ran higher. So just as an underlying assumption, I'm seeing this as a very bullish action, which proved itself like within, a couple of days, it just cleared that high. So taking,
Pull to the weekly, Divi. You'll see the volume in spades.
yeah, yeah, here it is. So saying all of that, something that moved that much, there are people who missed that move, so they're going to start accumulating the moment it bases, and they even might short it to drive the price down so they can scoop up or shake the weak hands. So after such a move, expect a base. The base could be short or long depending on the appetite of the institutional investors here, but that base, once it breaks out, then you can expect a decent move after that. So when does it break out? The moment that it clears the previous high, right? That's the full confirmation that you're looking for, is the moment it clears 141. Um, but what we're doing, and the reason why we're wedging it and everything, is trying to anticipate and getting in earlier, but not too early. So to me, and after all this introduction, to me, this is a fairly consistent wedge on an hourly chart, with a decent structure. It tried to break out. Somebody spanked it down here because, again, just an assumption, because they didn't have a full position yet. So they shorted the stock heavily, triggered a lot of sellers and a lot of weak hands to sell, and they started scooping it up again all the way down to 104, which was a decent level all the way down from here, right? This is the aftermarket, or the opening day high after earnings. So saying all of that, this is a wedge. You can clearly see how there's a change in character crossing this. There's some volume, not heavy volume, but there's volume that confirmed that this was a breakout, and what we're seeing right now is a retest of that trend line. It is likely, nothing's guaranteed, but it is likely that we're going to see this hold and bounce back. It is also possible that we're going to see something very similar to here, because it could be that somebody is still looking to add more positions, and they'll continue pushing it down until the next time it's going to break out. When it breaks out and clears that 141 and goes into new highs, then what I'm looking for, so I think this goes to 200, just because I can't give you any reasonable logic for that target, but fibs, basically the 1618 of this pull is at 164. There's also, let's say, the 2618 is already 200. That's a I think we're going to, the moment it breaks out, a couple of weeks or 3, 4 weeks after that, we're going to see 200 plus pricing on it. The reason why I liked it so much, and I had the blog post about it, is, effectively this is a very long IPO base, right? It's a 7 or 8 month IPO base that just accumulation, accumulation, accumulation. That usually leads to massive moves after it breaks out, and this was the base breakout. And you can see here that we just retested that base. Hold on, let me just clear up the mess that I did here. Yeah,
Yeah,
basically,
and so just quick while you're doing that, it was just these are the type of plays that you look for in an IPO, right? The
yeah,
base formation and the breakout, because it's a fairly long term view on it.
hmm
200 might be shorter term, but it's something that you have to keep an eye on because they were accumulating.
yeah. So
That's
so let's look at, and one of my favorite long base breakouts is Facebook. So let's look at Facebook earlier days. I remember it clearly because I played it. But this is, again, it went public in May 2012. It broke out in July. So this is 14 months base. right? If it's unclear, this is your base more or less. Right, it broke out of the base at 36. It is trading 10x now. And it actually hit the 10x mark fairly quickly after that. Right, when did
Yeah.
we hit?
As they say, right? The longer the base, the higher the space.
Yeah. So the moment it broke the base, you can also see a fairly consistent trend here. Right, this is daily, this is not weekly. This is a fairly structured move all the way up here. Then it kind of based again. Right, this is people taking profits, people selling again, and now it's just doing the next leg up. And you can actually see how it's accelerating here. And I still
Yep.
don't like to trade it. So
And do the same for Shop as well, just to show some more examples, right?
yeah,
Shop had a 2-year base
let's
after
see.
the initial IPO. I think it
Yeah.
tagged like
Yeah,
41.
don't remind me this because I was planning to buy it at 50 and and at some point I gave up on it and yeah. So again,
But
same
that's what this
exactly
market
the same
does,
thing.
right? It makes
Yeah.
you
Somebody
get
is buying here. Somebody is buying and buying and buying and buying and trying to shake people out so he can buy some more. And then he gives people hope that everything is going to be well, and then slaps the stock again and he buys whatever they're selling him, and he keeps buying and buying and buying until there's no sellers left, and then it runs. Right? There's many of those.
just some recent, solid
Oh,
examples, right? But that's I think that's the game plan here on Roblox um, is that it's setting up this type of formation for being potential new leadership in the upcoming years, right? Not just short term, but longer term as well.
so Google is not necessarily that long a base. So May,
No,
September.
but this is one of those never tested the IPO
Yes.
low again. Yeah.
So Google had a Dutch auction type of IPO, which was kind of a unique thing at that time, and I think it still is a unique thing. But this is a very interesting case study of, like, if you zoom in, right, you can see that's the IPO base effectively, and then you had the wider IPO. But like it started at 50, it went up to 58, then drifted down, and I don't need to tell you where Google is trading right now. But like if you zoom out. Right, the moment that you can look at this as also an IPO base. Um,
Look at that volume in the base, right? Like, look at the up volume versus the down volume. It's the up volume is showing you that there's heavy institutional buying, and the down volume is showing you the weekends who let go of Google at 100 and are cursing themselves when it's sitting at 3,000.
um, yeah, so give me another ticker that I can think of that had a long
Tesla, man,
base.
Tesla is probably
Oh
the
yeah,
best.
Tesla. Right, I started trading Tesla at 40. I still remember that.
Yeah, it was a
Um,
2-3 year base, and
yeah,
then
here.
boom, right? Like,
Yeah, I still remember. So this is adjusted for split, but I remember that I had like 90 calls. Um, that got into the money probably somewhere around, what was the split? 1 to 5,
five
right?
to one, yeah, 5 to 1.
Yeah, so I remember they got into the money, and I was counting my blessing because they went nowhere. I had leaps, and they were about to expire somewhere around here. Let's see, yeah, this is January. So I was counting my blessing and I sold them here. And like finally the thing moved, and then I just didn't look back, which was frustrating. And an interesting thing here, this is a funny anecdote. So somewhere around here, when it hit 100, um, and it started fading. I don't remember what it was exactly, but
It
Musk,
faded a lot. it was like a
yeah,
it was like
it
a
was,
60% move down in like 3 days.
yeah, but Musk came out and said, I'm committing $100 million to buy Tesla shares at this point. And it just, like, if you think about the $100 million that he invested back then to add to his position, right? And what it is right now, that's pretty, pretty impressive. Um, okay, let's. Next question is, how do I pick stocks? So I run screeners at times. Um, I create watch lists out of those screeners, and then I'm looking for opportunities out of that. And there's the tickers that I'm familiar with, or that that are in my watch list, in and out, and just looking for opportunities to buy them. And sometimes, sometimes those opportunities materialize themselves, and sometimes not. So it's either running screeners, looking for, one of the the best screeners that you can run is, and again, I'll go back to the Roblox chart. Anything that, hold on, anything that moved more than 20% in a day, just look for it to base and buy the base breakout. That's usually a high probability trade.
Yeah.
So,
I think a firm qualifies for that, right?
yeah, firm is, did we get a 20% move in a day? I don't, yeah, this is messy little thing.
Went from 109.11 to 133.
Yeah, that's true. So the reason why we all like a firm as of Monday or Wednesday, whenever we were, so this is basically right, there's a very messy cup and handle here,
It's terrible.
right, with just
But and so
some,
many gaps too. I think that's the thing. Look at the volume on those moves.
yeah, right, green volume is what rules here. I think weekly would be cleaner. Yeah, sort
You
of.
had similar like volume on Upstart as well in the base.
Yeah. And this is also, you know, I can argue, and I may be wrong, but I can argue that this is your long IPO base, right? And if this is a long IPO base, then this thing is going to $1,000. Right? That's just deducting from the same thing. However unreasonable this may seem, remember that Google had a long base around 50 and now it's trading at $2,900. I'm not saying it happens next year, but 5 to 10 years from now, this is if this base holds and we're going to clear it above 150, then this thing would run to 200 plus fairly quickly and just continue trending from there. Google. Somebody asked.
Should you buy 200 calls? I think you're already in those random, right?
185. Oh, I actually have
185.
the 185 for Jan and 220 or 230 for February, which is an
Yeah.
earning thing. So
And to
Google.
answer John, oh, sorry, go ahead. You're going.
No, it's okay. I'm just setting up the chart so you can.
I was just going to answer John's question about ATR. ATR is a small cap stock. It just moves like crazy, but that's not what's happening in it. It's controlled by short coverings and not short coverings until they can show that they're profitable, that their business model works, all that other stuff. Um, yeah, it doesn't. There was a big base in ATR on the weekly, and it broke out of that last year, and now you're back in that base. So that's it's a good sign and that's a bad sign, right? Like um, it's finding support in the IPO base, which is really good, but it's also back to the IPO base. So if you were the guy or the girl buying at 40, 50, 30, then then you're feeling a lot of pain right now. So um, it all depends on what they do. In my personal opinion, based on the company, is they're a third party seller on Amazon. And yeah, they have some AI technology and stuff. But do you see ATR becoming a a company like Amazon when they're using Amazon's platform to sell? So right, so then you got to think about what the long term trajectory and stuff is. But ultimately, right now, it's trading below their annual revenues. So it's based, and as TBI has pointed out it's trading below book value, but obviously no one cares. So it doesn't. It only matters when it matters, right? So um, I think you just have to. You either have to keep a small position and wide stops. Sorry, if you're doing, yeah, small position and wide stops, or it's just part of your portfolio that's speculative, right? That it's going to move and it's going to go higher over time as they start ironing stuff out. But I don't know about you, Doobie, but you typically don't want to see things going back to their IPO bases.
Yeah, that's
Like you want to test the top of the IPO base, you don't want it to sit in the IPO base.
yes. If well, you don't want also to lose the IPO base low, right?
Well, that's what
Redef
what's it called?
redefines the base, like XMTR. Yes, you can say that.
No, but look, Uber, Lyft, Poshmark, all the recent IPOs that are overvalued have gotten smoked. There's a handful that haven't. I think Snow is one of them, which trades at an insane premium personally, but institutional support's there ultimately on Snow.
Well, that's Warren Buffett for you.
Yeah, exactly. And it's not just Warren, right? There's a lot of big name people in there, and that's what you got to. But back to what I was saying, I just I don't like stocks to go back to their IPO bases and sit there. If they test the IPO, and this is initially right, 5-10 years from now, if it goes back to the IPO base, there's something seriously wrong.
Yeah.
Right. So that it all depends on timeframes as well. So you don't want to see Google back to its IPO base because that would be bad.
Well, you probably would be. That's $2,900 below. So
Yeah.
I
Hopefully you're
apologize
out before that.
for the messy chart. There's just it's an active trade there right now for me, so I have a lot of drawings here. I'll try. I don't want to remove them because I'm actually using those lines, but I'll try to show you what I'm seeing here. So the bad is, this is the channel that Google has been trading in, and we're actually outside of this channel as of when is that? September this year, right? We started drifting lower. So this is losing momentum, which is not a good sign. However, the whole market lost momentum and Google has lost less momentum than the rest of the market. So that's the bullish, so that's relative strength. To me, this is just consolidation, right? If I look at this range, this is just chop within a range. And the last few times it chopped within a range, right? This is your, previous chop within a range. Well, this is not a good example, but right, here's your range, and it just continued higher. Here's your range, continued higher. So I'm still bullish on it, but again, if it's going to lose here, then it's probably going to go and retest the lows. I like the relative strength on it. I like the structure here. Basically, you have like a cup and a handle here. So overall, it looks bullish to me. And just being mindful that the market looks like crap, and we're trading outside of the channel that brought us here. So
Yeah. Do you want to talk about Amazon?
that I'll let you talk about Amazon.
I don't want to talk about Amazon.
I'm not. There isn't anything I can say about Amazon for in a public forum right now, so that's
Yeah.
safe for
I
work.
think what what Amazon has been is it's just driven by the options market. There's not that many shares traded in a day. I think it's like 3 million average. And when you see these call spreads coming in 1,000, 2,000, 3,000, it's going to be directional until something kicks it out of that momentum, and those call sellers and buyers or whatever get blown out of the water. But until they do, they're going to continue controlling the movement. What's great about Amazon is that it's consolidating. It's been consolidating for a long time. It's building that base that we've talked about in the IPO. It's the base that it built between 2018 and 2020. Um, it's the cheapest mega cap thing outside of maybe Facebook, right? In terms of market cap, right? I think it's only like 1.7 trillion or something like that, while Apple approaches 3 trillion. So the time will come, and when it does, it will be
Yeah.
most likely be a 20% candle in a week. Um,
And
it won't.
typically happens a week after all your position expired. So that's the
Yeah,
that's the
yeah.
time.
It's what it's what it is. Christmas has created some stuff. I don't think it's retail sales that's going to drive this out. I think it's got to be something that's completely unexpected.
Stock
Um,
split.
what's that?
Stock split.
Yeah, which is never going to happen. So that's not the conversation that I look at. But I think the reason I play it and the reason I'm looking for it is when it does break out of this consolidation, it will be a monster move. It won't just be like, oh, I tagged all time high and went up by $20, right? It'll be I don't what do you think to be that's what I think. It'll be
Yeah.
straight 20% candle, 15-20% move in a week.
Yeah, the let's look at right, weekly is probably the best way to describe that.
Yeah, Daly's a shit show.
Right, consolidation, move, consolidation, move. So it will happen at some point. It will happen when we least expect it, and we will sell here and be happy with us, and only to see the next day it going, 20% higher. So that's the reality. The problem with those long consolidation is you get exhausted and you're going into disbelief. So when it finally goes, you're just taking profits early. So that's also something to be mindful of when it happens. Um, One quick answer I saw somewhere that why do I like Google so much? Um, Google has so actually my true love is Netflix, but it's been good and then it's been bad, but now it's trying to be good again. The reason why I like Google is the premiums. It's just that you have like there isn't a lot of tickers that can move 50 to 100 points a day, and you can get 30 points out of the money in sub $4. So the and I think it's because Google rests and moves in a very strange pattern. So it creates an opportunity because what's pricing the premiums is calculation of the volatility. So it has days where it rests and then it has days that it moves, and I'm not sure the people who are pricing the options are accommodating for that. That's why you get like Friday, and at some point there was like 10 points out of the money you can buy for a buck, which is ridiculous. So I like that structure because it gives you a better risk reward. Rarely do you get that on Amazon. Rarely do you get that on Shopify. You need to go 50, 60 points. And to be honest, when they do that move, then it pays off. But with Google, it just that those opportunities are more widely available to some extent. So that's the
Yeah,
reason why I like Google.
and just to talk about Google a little bit more is, I think it was January when we identified how Google had a major shift in character, right?
Yeah, it's
It
true.
normally gaps and then fills the gap like a week later. Um, and there was one or two gaps going into January that didn't get filled, and you're like, oh, that's interesting. That's
That's a
even
good point.
though the markets were weak in January and February for the mega caps, it was interesting to see that Google wasn't filling the gap.
Yeah, I don't have earning details here, but like traditionally, every time Google was gapping up, and I remember that I was talking to GP about that, and I said, what a shitty stock. It never holds the gap. And then was it January this year when it
Yeah,
made?
yeah, yeah.
Yeah.
It's when the bat
So
signal went
right. So
out.
you can see this is the ER pop, and it never filled the gap, and it just went on. and on and on and on. So this was a point where it had a change of character, which is a very bullish change of character. Until then, I'm trying to find other gaps historically, but you can look at Thinkorswim when you're seeing right this is probably an ER gap, right? It just fades and then it continues higher. And this was the like you would never buy Google into following week on earnings because it never held a gap.
Yep.
Right here, this is a good example. It gapped, it continued, but then at some point it filled the gap before continuing higher.
It's always like I remember where I was talking to my brother about this in 2015, as you have there, because I got him to buy it around like 5:30, and it finally gapped up, and then like a week later, it was right back down. It's like, um, it's it's always, for as long as I remember, it's filled every single gap. Maybe not like to the penny, but it normally pulls into the gap pretty hard and then resumes the uptrend. So that was the first thing that we kind of identified and noticed on Google earlier this year is like, okay, well, that's quite different. It's not filling gaps. It's actually holding and pushing higher. So I think that's also part of why you've been trading it more, because it's been showing the strength
Yeah.
um, from the beginning of the year. So if push comes to shove, it's the one that's going to be it's the one that's going to be stronger than the rest of them, right? So as you can see, I think a current example is Apple right now, right? While the market is getting whipsawed and obliterated on a day-to-day basis, stocks are getting smoked. Apple's like, I don't care them too much. I'm going to just continue higher, and that's my one of my biggest cases for why this market is just trying to shake out as much as they can before we see a kind of a blow off top type move.
Mm-hmm.
Is what I was thinking. I think I posted the chart on the Nasdaq Composite about bubbles, right? Everyone keeps calling this a bubble, but it's been the most frustrating, shitty bubble that I've ever seen. Like,
Yeah.
right?
This is
Like,
not a bubble. This is just a
yeah.
trend, aggressive trend, but it's a trend.
So the double will be when you see the index double in 6 months, right? That's a bubble. That's, to me, here is consistent shaking and baking and getting people destroyed. But that's the perfect scenario to set up for a potential bubble moving forward, because all this stuff, all 2021 has done is taken people's money, their confidence, their abilities to kind of be like, oh, this is technical, but it's not traditional technical trading here. There's a lot of overshoots and on both sides, upside and downside. So people are getting whipsawed out. And when the final mark, as Julia was talking about, is like you'll sell 10% into the move and the move's 100%, right? So you're going to have a lot of chasers that start coming in, which is what bubbles essentially are to me, is people chasing the stock higher, hoping it moves even higher, right?
Mm-hmm.
So that's one case scenario for me, is that we are putting in the final steps of shake and bakes for a lot of people before we move. We have our bigger move higher, but there's no evidence at the moment to suggest that. So um, just anecdotal for me, and something I'm keeping on watch.
Yeah. So one thing I drew here, and this is daily chart, right? You can see to GP's point, like this is a trend that's stable and predictable and everything is great, but this is where it starts going, right? And the moment it starts going, you start getting the volatility part of that. The trend ended at 85 and we're at 175. So this is probably good for another, like typically when you break out of this, you can expect 2 to 3x move from a trend. That's from my experience, just a kind of a rough estimate. So I think Apple is good until, I don't know, 200 to 240, right?
Yeah.
From this point, that would be a good target for Apple and probably the rest of the market.
Market caps be damned. No one cares if it's 1 trillion was the hard one.
Yeah.
Anything
First,
after
the
that,
first
all good.
trillion is the hardest. Then it's just yeah. Trillion here, trillion there. Very quickly, it adds up to real value. Um, just one thing before I forget. So Kurush, and again, I apologize if I butcher your name. Never, never, never buy options at market. Never. Just put a limit order. You would sometimes see an option trading at, a buck 50, $2 that, and suddenly you see like a $20 trade hitting the tape. And the $20 trade that hit the tape is somebody who used a market order, and there's people who are looking for opportunity to basically crush, because the liquidity in options is much less than stock. Then there's opportunities for people to basically sneak in, and if there's no ask, they'll sneak in and just put a high ask, and that will fill your market order. So if you want to get butchered, use market order. If you don't want to get butchered, then put a limit order even at the ask, but put a limit, because somebody will take advantage of you. Never use market orders on options.
Yep, that's 100%. Like normally the markets are efficient and you'll be fine, but you don't want to be that person
Yeah.
who's not fine.
And by the
So
way,
always,
if you're getting filled too quickly, then it means that you did something wrong, just as a general rule of thumb. Like if you place an order and you get filled the moment you place the order, then you could have potentially paid less than what you paid. If somebody rushed to fill your order, then they're taking advantage of you, just as in real life.
yeah. John, I am holding the ATR commons to answer your question. For me, I'm not even looking at it honestly from a day-to-day basis. It's not a heavy position. I think it's about like 2 or 3%. So if it goes higher, it goes higher. If it doesn't, it doesn't. I like the odds of where it can go, so I keep a small position. It's part of the spec portfolio. I'm not trading it. That's more, I think, TBI. I'm just holding and waiting.
And so, Freddy, just to answer your question, I usually trade enter and exit trades on 5-minute chart, but I look at 1 hour and 2 hour charts as kind of an intermediate between, intraday and longer term.
Yeah, yeah. And for me, I don't use estimated moving averages or any moving average on my intraday. I think it clutters that. I can't. It makes my brain spaz. So I don't like it. I like the clean charts. So I have the levels that I talk about quite often, which is yesterday's high, yesterday's close, and yesterday's low, because it's based on, I think we've talked about before, is just ORBs, right? Opening range breakouts or breakdowns, however you want to put it in. So that's how I do my intraday. I'm mostly looking at 5-minute charts during the day. Um, I look at 30-minute charts for a better idea of the short term kind of movements, and um, on it really depends on the stock, right? Like I'm not going to sit there and look at Amazon really on the 30-minute very often because it doesn't have those crazy moves on a 30-minute basis. But then it'll depend on the day, right? Like if something's moving 5-6% in a day, then it'll be shorter time frames. So I think it all depends. And you have the ability on Thinkorswim to create multiple views and stuff like that, so you can just switch back and forth between. Any other questions we have here?
Yeah, I'm starting to run into the time limit here.
Yeah, I gotta head out as well, but just be careful in general of the next few weeks. You're into the year end. People are repositioning what their portfolios look like for next year. So there can be volatile moves up and down. I imagine that next week's UpX is probably going to be the craziest, and then
Yeah.
after that will be pretty muted. And next week's OPEX also includes the Fed. So tomorrow's CPI data probably is a catalyst on stuff for the short term, but the Fed and their rhetoric next week is something that we're gonna have to keep an eye on. Does Powell and his team start talking or backtracking on the whole acceleration of tapering conversation, right? Or do they even push harder? So those are the things that we're going to be looking for, because for the better part of what 13 years now, we've had easy money and the backstop of the Fed. So I don't think the backstop of the Fed is going away, but they're in this precarious position where they have inflation data that's running hot, even though it may be transitory as they talk about, but it's running hot. And they might be forced into making some moves like accelerating the tapering or accelerating rate hikes earlier. And those are the things that you have to kind of watch for here, because that's a definitely a catalyst for a lot more volatility and a lot more downside if that does start happening.
Yeah, just one thing I wanted to cover. Wanted to talk a little bit about Roku, and I'll do that real quick. It relates to what JP was talking about end of year. So, just understanding the psychology of the market, right? This is, sorry. So, Roku was a monster, right? It ran from, June 20 around 120 to 400 in what is this? 7 months. This is a monster move. So everybody like who bought here is sitting happily, and they're buying, the BTFDs all the way through here, and they're thinking they're heroes and even getting their new highs, and they're buying more here. So there's a lot of folks during 2021, right, that bought in that range, and they potentially have not stopped out. So everybody sitting here is coming up to the year end and seeing there is a lot of people who bought here at, for 80, and they're still holding because they're long time investors. They're coming up to year end, and they're looking at their whole portfolio and saying, okay, I've got some gains in few of my stocks, and I don't want to pay too much taxes. So what do I do? Let's just sell the losers, so I can offset the gains with the losses from that position. And if it reverses, then I'll buy it sometime next year. So everything that died, and I keep repeating this point on chat, so I just wanted to put an emphasis on that. Everything that died significantly in the latter part of the year, like Roku, like W,
Square,
right? W as well, Square,
PayPal, literally, I can name
Zoom,
300 stocks.
Beyond. There's a long list of those guys. There are people who are trapped, right? This was, what am I looking at? Zoom. There are people who bought Zoom at $400 here. They're looking at, and still bullish, right? There's a trend line here. It's probably going to get supported. But there are people who are going to use the pops to, because nobody likes to, they prefer to sell higher, but they're using the pops to sell and harvest those tax losses. So, and a few people ask me on DM, are you chasing Roku? No, I'm not chasing Roku because I think this move is fadeable. It's not, it doesn't mean that things are not going to bounce by the end of the year. It just, I'm pretty confident, and my confidence is coming from many years of pain of buying it here and saying, yeah, it's finally reversing, and only to see it, let me just illustrate that in a, where's the brush? Okay, so they will pop, but they will also drop. And it's a known fact that even institutional investors would wait until the end of the year to pick it up cheaply here, because they know that people are selling it towards the end of the year to harvest those losses. So just from past experience, everything that died during most of the year or during the second half of the year is going to continue dying until December 31st. It is, however, a nice opportunity to buy this on the last day
Yeah,
of the year because everybody who held their patience and didn't buy it here in order to get it cheaper are actually accumulating in this area. And you're going to see them pop, and you can see that, I can give you a few examples. W last year was exactly the same. This was one of our end of year plays, whereas January, right? You see what happened on December 31st and what it did after that? That's W. What else did we play? I don't remember already.
AMC.
AMC, yeah, AMC, it's the same thing,
Yeah.
right? AMC, January. Where's January? Hit 192, and I still remember asking if what is there any reason for it not to trade it over 10 in a year? Um, right, December 31st. This is $2, right? We had a few. I don't remember which else did we had.
Oh, there was a ton.
Overstock was one of them.
I
Overstock.
think that's what. So I was a little surprised by today. I thought today we'd have a continuation, and the CPI data for tomorrow would potentially cause us to sell off a bit going into the weekend. But we just sold off today. I thought a lot of things were going to at least test the 20-day, and that's where I was wrong. But uh, every time something's oversold and has a hard bounce, they come back to retest either the lows and hold or somewhere close to the lows and hold, right? And
Mhm.
then you have the real move kind of begin.
What I like here, and I pull this chart here. So the fact that we're holding this is 21 EMA. So the fact that we're holding the 21 EMA and actually tested it, it's pretty bullish from my perspective because the 21 EMA is like the 20 SMA. That's your mean. So the fact that we cleared the mean and now we're going back to retest it if we hold, that's bullish from my perspective.
Netflix is another example, right? Netflix retest of the entire breakout and it held. So if we continue to hold that level,
Yeah, that's why I keep buying
but
Netflix.
I think
Okay.
that's it's bounced off that level. So now it's going to come back and it's already come back today, and hopefully hold that 602 level, a little bit higher than the 593. Um,
I think if the market bounces, then Netflix would lead, but this is me, a hopeless optimistic here. Kurush, I really have to sign off. I will chart CN later on and I'll post it on chat if that's okay. You will
all right,
have
thanks
CN chart
everyone.
before the end of the day.
All right, thank you everyone.
Thanks, everybody.
Have a good night.